and welcome to the Payments Leaders Show. I'm your host, Adrian Evans, and absolutely delighted today because we've got a new topic that's of digital currency that we haven't explored before, and delighted to have Ricardo Correa, who is an expert partner at Bain & Company on the show. So welcome.
Thank you. Thanks for having me, Adrian.
My pleasure, my pleasure. And first of all, a big shout out to Jeff Tyson, who actually connected us. So thank you, Jeff. And yeah, really appreciate that. So on this show, we really are about exploring the opportunities that are abound within the payments ecosystem. And for guests who usually explore the opportunities before they then evaluate the risks. And as I say, Web3, digital currency, I think I'm going to learn a lot today, as is the audience. So I wonder if we could start with sharing a little bit about your background and how you came to explore and be in this area.
Yeah, sure. Thanks, Adrian. So starts way back when I grew up in Zimbabwe, and I was probably 14, 15, 16 around that time where Zimbabwe went into hyperinflation. Obviously, this was very new to me, but I didn't understand hyperinflation at all, of course. But what I did understand is that the 2,000 odd equivalent pounds that I had in my bank account within 3 months was worth like less than half a toothpick. And so, I got really interested in how money works at that stage, the instrument of money versus payments more generally. And, my kind of work since then has really been exploring how the instrument of money works, the form factor, the function, but also then how payments move both domestically and cross-border. And really the goal is, how can we make this more secure? How can we make it better? How can we make it cheaper? And how can we make it kind of more stable?
Wow, fascinating. As I say, somebody who's studied economics, this is just fascinating for me. So how's the journey evolved from there? That provoked the interest, but how has the journey evolved? So now you're a partner at Bain. How's that
Yeah.
happen?
So from there, really, most of the work, I started getting into technology. I started programming very early, and then kind of the fusion of, technology, building code, building systems, and then money kind of quickly developed. So fintech really kind of was early. I spent many years coding kind of the big systems, e-commerce systems, Tesco.com being one of them. And then within those systems, there's always payments. I mean, at the end of all of these processes, there's a payment to be done.
Yeah, absolutely.
And so, moving from kind of traditional payments and then starting to explore, kind of the emerging payment side, probably 2014, around that time, I was working in Australia with the Commonwealth Bank in Australia around the payments modernization, core banking modernization was the wave back then. Of course, payments was a really big component of that. Interestingly, at the time, payments wasn't really given kind of the attention that it has today. It was still kind of, the thing that you do, kind of boring. You got to go and execute kind of this transaction. So I'd say that, from 2013, really, it started to pick up more interest as a result of Bitcoin and at the time Ethereum. Ethereum kind of 2014 is when it really started to hit. And so by 2014 started to focus on, what does, a payment look like that has not only the kind of the transaction details, but also all the data related to it, a completely different paradigm. Whereas, traditionally a payment happens as an instruction from one node to the other. All the processing happens at the nodes. Now you could have the processing happening on the network. So the transaction itself has the data, has all of the information as well as the transaction details. So really exciting. And then from 2014, 2015, I then joined the R3, which was building out an enterprise blockchain called Corda, and spent 8 years at R3 helping to build up that business. And then the last 5 years at R3 focused on central bank digital currencies, deposit tokens, and digital assets. So rode that journey up until February this year, 2024. I joined Bain in London, really focused on Web3. And Web3, I know, is a kind of a bit of an overloaded term, but for me, Web3 has three things: digital money, digital assets, digital identity as a base. And then from there, of course, all the different kind of use cases that we're seeing.
Brilliant, brilliant. Yeah, I think you're going to be really helping us with lots of definitions of things today. So going to be leaning on your expertise.
Wonderful.
So tell me, I think you sort of probably hinted at it there, but why are you so passionate about the payments industry? Because as you said there, it's sort of exploded in the last 10, 11 years. And it was always sort of known as a bit of the plumbing of the financial service industry. But now it's not just got interested, it's attracted lots of VC money, etc. So why are you so passionate about the payments industry?
Yeah, I think, listen, personally, so growing up in Zimbabwe, I left Zimbabwe, moved to the UK. I then worked around Europe. So I've lived in 9 countries, and I move money. I'd say, if not every week, every other week. My sister lives in South Africa. My folks live in Portugal. I'm bouncing around. So for me personally, always trying to find the best way to move money, kind of quickly, cheaper, faster, kind of more transparent. And so there's a personal interest. Like, why does this take so long? I remember early days, you'd send a payment, it would take 3-4 days. You have no clue where the payment is. And then even though I was sending money to the same kind of destination, of course, it would corrode. So, today it would be less, £20. Tomorrow it would be, less £30. And so there was always this corrosion. And so the question was, well, why is this happening? And then if you started to follow payments through corresponding networks, you start to see just the complexity of the system. It's super highly complex, highly regulated, of course. And so the question became, like, how could we make this better, cheaper, faster?
Yep.
Like, why does it need to be so complex? We're moving bits and bytes on different computers, but yet payments are taking 3-4 days. So as you start to peel that onion, you really start to see just the kind of the layer cake of complexity that's there, and then starting to kind of look at an emerging tech stack.
Yes.
Right around blockchain, not just blockchain, by the way. Of course, you start to see, AI, blockchain. You start to see kind of the Internet of everything. And as you start to put all these things together, you can imagine a world where perhaps we can rebuild a new tech stack, right, and a completely new paradigm for payments. And so, the Internet of data moving to kind of the Internet of value, what does that look like? And so really kind of excited to start to kind of imagine what that might look like. And again, the industry's moving slowly towards that blockchain, digital assets, digital currencies, lots of momentum with CBDCs. Of course, there's been a little bit of a kind of a winter for the last several years, but we're starting to see a little bit of a comeback now. So all that together kind of spurs the interest, if you like.
Yeah, just as a business owner, it still stuns me how I send an invoice out. We obviously do a lot of business internationally, and then there's just this void and then the money sort of appears, and then a week later, my bank informs me that I've just received some money, and it's just like this piece in between. If I was tracking a parcel, I could track a parcel much easier from that perspective. There's just huge opportunity within that space. So
huge opportunity, and that's a cool analogy actually. And also food, you order food and you can see every kind of every stage of what's happening, parcels and so on. So there's no excuse. It's like,
I agree.
Let's just go and solve that. And I think a lot of it, regulation obviously plays an enormous part in trying to kind of solve this kind of puzzle. But it's you start to see the regulators kind of positioning themselves in the right way. You start to see, the technology maturing to a point where it can actually deliver to the promise. And so, all these things are happening in kind of a perfect storm, I feel, is upon us, not too far away.
Wonderful, wonderful. Well, I wonder if we could dive right in, and if you could share with us or share with the audience, what do you see as the opportunities across digital currency and across a number of different areas as well, particularly business to business as well as business to consumer? I wonder if you could just share what's potential there for digital currency.
Yeah, I mean, I suppose, first of all, digital currency is such a big space. Perhaps we can categorize it as, domestic payments, international payments, and then within the domestic landscape, kind of the retail side, the wholesale side. Just for simplicity. Maybe we focus just on retail initially. The wholesale side, honestly, is a little bit more obvious in terms of the benefits. Or maybe we start there. Why don't we just touch on wholesale
Okay,
for
great.
now? And for the audience, kind of wholesale is the payments you don't see. It's kind of bank to bank payments, in its most simple form. And what's happening there is, a lot of delays in payments, a lot of reconciliation, end of day
Yep,
cycles, intraday cycles,
yep.
and at the end of the day, what have you got? You've got kind of a main ledger held by the central bank, and then individual ledgers held by commercial banks, and then other ledgers held by payment service providers, and so it goes, right? Layers upon layers of ledgers. But the ultimate ledger of kind of the master record, the master ledger, sits with the central bank. And there's processes that run there that settle and kind of help to kind of get payments to finality. And so the big benefit there is completely collapsing that complexity. Whereas the payment is made between bank A and bank B, and that transaction, the truth, is shared across all participants in the network at once in real time. There's no reconciliation, there's no
Yep,
counterparty risk. It's all just real-time payment, and there it is. Everyone has access to that. That's
yep,
super exciting. And that's good for PVP, payment versus payment. But
yep.
there's this additional kind of opportunity around DVP, delivery versus payment, which then introduces digital assets. And then you go into the realm of capital markets as well. So, how we settle trades has an enormous kind of benefit there as well, because again, you have all these different cycles for settlement and recon. You talked about an invoice. It's the same thing. I make a trade, I send you the trade details, you have to make a payment. You've got, 7-day cycles, 30-day cycles, 90-day cycles. Liquidity is a huge issue. Of course, you're tying up money
Absolutely.
to settle these obligations. And so we can solve for all of that in some capacity. So on the wholesale side, you're just making the system much, 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 much more efficient. You're getting to real-time settlement. You're completely eradicating reconciliation, counterparty risk, and you're also providing a hell of a lot more transparency and visibility as to what's going on to the regulator. So, the regulator moving from kind of rear view regulation, meaning I'm having to look at what's happened in order to find kind of, data points that then I go and investigate for things like fraud and nefarious activity, versus, hey, I'm able to see those things ahead of time and I can predict these things, right? So
Okay.
that's a really fundamental shift. Wholesale. On the retail side, Ricardo paying Adrian, business A paying business B. I think the big promise there is, notwithstanding the fact that people shouldn't see that it's a blockchain. It's much like, you and I are making this call probably over the internet, but we don't care. We're just making a call. And
Yeah,
here
yeah.
I am, I'm making a payment. But what's going to be cool is things like smart money, right? So the money's smart, and also programmable payments. I think B2B programmable payments, I can set kind of, rules, conditions, triggers, not just the things that I set, but triggers that come from, the outside world. Like a stock market price changes and certain things need to happen, for example.
Yeah.
So the notion of smart money, programmable payments is really quite exciting. And again, the notion of just real time. If I send you an invoice, why can't you just settle that thing immediately? Of course, there's reasons that we don't settle payments immediately. You want to be able to hold that money kind of, in your own bank account for as long as you can, in order to maximize the efficiency on your side. So, we have to cater for all of that. But the point being is, with a smarter instrument that's more real time, I think we'll have a whole bunch of different levers to make the system just a hell of a lot more transparent, cheaper, faster, and more meaningful to you and I.
Excellent. Excellent. So, a couple of points there. When it comes to the wholesale piece there, what you just described was sounded like a panacea, but obviously very useful for international trade and UK PLC and every country out there trying to do business. What steps would actually need to happen for that to be realized, where you can collapse that in terms of the complexity?
Yeah. Whew. Had a lot of steps. I mean, the US is doing
Just give us the first three. Give us the first two or three.
The first three. Well, first of all, there needs to be the issuance of the instrument. So, you know, a wholesale CBDC, for example. So, you know, is it the central bank that issues it? There's a couple of models there. Either the central bank issues a wholesale instrument, wholesale CBDC. You know, today there's two forms of money in its most simple form. There's reserves, right, which is for the wholesale side, and then there's cash, which is for the retail side. You and I, you know, notes and coins. On the reserve side, you create a new account, which is not just your reserve account for, you know, Bank A, but now you create a CBDC account for Bank A. And now I've got, you know, both reserves and CBDCs, right? So changing the back-end system at the central bank to be able to issue a central bank digital currency at the wholesale side is probably the first step.
Right.
Now, if the central bank doesn't want to do that, it can always partner with a third party and then issue what is known in some circles as kind of a synthetic CBDC.
Yes.
Meaning that it's issued and managed by a third party. Switzerland's a good example of that. You know, the SDX or the SIX exchange actually manages the instrument for the central bank, right? So it's a kind of a third party, a synthetic side. So step number one, issue the instrument, right? Step number two is you've got to integrate the instrument into your processes and into your systems, right? So that's at the bank side, you know, kind of integrating the instrument for PVP, payment versus payment. You know, Bank A paying Bank B, you know, I know not only have the instrument, I've also got the network. Of course, you've also got to kind of implement the network, the blockchain or the distributed ledger technology that allows us to move this instrument around the ecosystem. A little bit analogous to kind of roads and cars. You build the roads, then you have the car, and now you've got kind of the ecosystem in place, right? So step two is, you know, issue it, have the network in place, have it integrated. And then probably step three is, you know, make sure that all your processes are starting to kind of make use of the instrument, and you're starting to kind of slowly strangle out the old world, right, and bring the new kind of processes into the foreground and allowing kind of, you know, a real-time payment versus payment to happen. I suppose the fourth thing, and probably fourth should be the first, is all the regulation that needs to happen in order for this to be legally permissible, because there's two things in payments that sometimes are not well known. There's settlement, but after settlement, there's finality. And finality is kind of the legal side of settling the payment. Because even though the system says that Ricardo paid Adrian, there needs to be kind of the final stamp of finality to say, I, as the regulator, as an accredited, licensed, regulated kind of entity, now you know, endorse this payment as final. Right? Can never be kind of can't be reversed. Ricardo paid Adrian, the £10 is in his account, that's it, there's no dispute, right? So that's the other thing that needs to happen, is finality. The legal side of it needs to kind of happen, and so that's probably the first thing.
Yeah, I knew I'd be learning a lot today.
Yeah, that one was new to me as well, but a good friend of ours that I'll call out, Tony McLaughlin at Citibank, is a real guru in this space and certainly helped me to kind of get a little bit deeper in that side of it.
That's one of the great things about the ecosystem, though, isn't it? It's like there's so many people who are willing to share, like, very collaborative, and from that perspective. I wonder if we could just go back to the retail side and about digital assets. I wonder if we could just go a little bit deeper in terms of what the opportunity there is for digital assets, because I think obviously we work in the industry, but then many people, and I find this, a couple of things in the payments industry. On the one hand, the technology needs to exist, the desire to do so, and the legality needs to happen. But then there is an education process, and I always think contactless was a great example. Contactless have been around for quite some time, but it took COVID, where, and now now you go contactless on a card or on your wallet, and there's £100 to in the UK limit. And going back 5-6 years ago, I think that there was a huge inertia relative to that. So out of those things, well, what's the most important from desire to do so, as well as the education to drive that adoption?
That's a great point. I think education is probably the biggest kind of area that we ignore
Mm,
most times. Kind of, education and change management, kind of,
yes.
changing behaviors in order to get that adoption. And some of the work that's been going on globally around central bank digital currencies, some countries have really focused on education and collaboration as the very first thing. So,
Okay.
kind of engage kind of the retail sector in a kind of early on the journey,
Mm,
because then it's kind of a natural education process. You're part of the design, you're part of the experiments, you're part of the kind of collaboration, and so you're learning all together at the same time. It's not like, oh, listen, we'll go and figure it out and then we'll come back and teach you. That
yes.
shouldn't be the way.
Let's
I
do it
think the
together.
way,
Yeah.
yeah, just everyone gets on the journey together, because we're all going to have to think about all the change, the behaviors, and the adoption cycles kind of together,
Mm,
different levels, of course. So, that's a great point you raise. Being early in the education piece, I think, is super important. Yes, the technology needs to exist, and the technology has been kind of building for a while there. And then you see these kind of spurts of growth and adoption, and then massive collapse of adoption. And I'll call out NFTs kind of as an
yeah. Yeah.
example, because digital assets exist again in many different kind of sectors in the wholesale retail side. And we'll talk about some of those in a minute. But on the retail side, NFTs and cryptocurrencies, kind of the simple ones that we can call out. Of course, initially cryptocurrencies, Bitcoin, Ethereum, Dogecoin,
Mm,
Shiba Inus, all the kind of digital assets, cryptocurrencies that we see, but very difficult for moms and pops,
yep.
general kind of civilian citizens to kind of really understand the fundamentals. And then you kind of get taken on a bit of a story with a friend and another friend who did something, and so on and so forth, and then you just blindly get into kind of investing in these things. And then you can have a really good time, and then you can have a really bad time, right? Things go up, it's great, but then things
Mm,
go down, not so great. So, digital assets, NFTs is an example that was really hot, I'd say maybe 2.5, 3 years ago. Lots of people got in buying Bored Apes, and then lots of people kind of regretted doing that. I think we're starting to see a little bit more clarity around how this thing might evolve in a way that is kind of more stable,
mm,
more secure, safer. And on the wholesale side, digital assets, we talk about things like equities, bonds, securities, kind of anything that's in the capital markets that you can secure, or
yep.
sorry, that you can digitize as a digital asset. And maybe we should kind of unpack the difference between, digitization and digital. There's two different things.
Yep.
The digitization of something is different to creating a digital asset
Mm,
of that thing. And maybe I'll just do it now.
go for it. Yeah.
Digitization. You take something that's on paper, you take a photo of it, right, and you send it as an email, and you digitize the piece of paper, right? But it's no smarter than the piece of paper,
Of
perhaps,
course.
right? Versus saying, I'll take this piece of paper and I'll create a digital asset of it, and the digital asset will have different features and functions and properties. Those things will represent what's on the paper, but I'll also give them logic, right? And they'll be super smart. Like the date will be smart. It'll know what date it is, and if it's of a certain date, it can do certain things,
Okay.
right? So you're kind of creating a smart instrument of that particular kind of real world, and you start to see real world assets become a really big thing. And in fact, real world assets is the huge opportunity I'd suggest to you in the next several years. Um, so we talked about, kind of, the adoption, the education, of course, the technology needs to be in place, but then beyond the technology, the hype cycle kind of needs to settle,
Yes.
right? And where it settles, and then you start to get into this nice gradual adoption curve, and
Yes.
really, that's really where we'll see the mass adoption. But you got to
Big.
start small things, right?
Okay.
Like, I'm digitizing, real world assets is hard to get to, but things like my license, my driver's license, my passport, right? We don't need those things to be physical anymore. In fact, most passports today start to have a digital kind of electronic passports, we call them. It's got a little key in it. Now you can start to use that, but eventually you can see that that'll just move to your phone, right? Or your digital wallet, which is the other thing that you'll start to see more and more and more of in the next several years. And those digital wallets will hold your digital assets, like your driver's license becomes a digital asset, and your passport. These kind of things will be probably the early kind of instruments that would adopt more easily than things like, an NFT and so on.
Okay, brilliant. Yeah, thank you for bringing
that a little bit, but
yeah, thank you for bringing that to life, because I think that was the shame almost in many ways with cryptocurrency, etc. Everybody's seen it as another sort of investment piece, whereas I think we forgot the actual use of the assets, because that got waylaid with the huge hikes and then the huge falls as well. So seeing that physicality brought to life, that's what's going to happen, as you say, to your mom and pops in the world. Like, therefore, how is this going to affect my life as a citizen? That's the difference. Right. So I just wondered if we could just go off and just talk a little bit about tokenization. What's the opportunity? Well, first of all, what is tokenization, and what is the opportunity within tokenization?
Again, super overloaded term. Tokenization. So, I mean, tokenization today, a lot of people look at tokenization as tokenizing things like your identity within a network. So, for example, you have an identity, you take kind of all your details, and then you tokenize the identity. And what that means is you just get given this very long key that's kind of alphanumeric, and that key is what you use around the network, and the only people that can decipher the key are the people that tokenized it, and then actually break it, kind of decrypt it, and then pull out your actual details. But what's fun about that is, as the key circulates around the ecosystem, no one knows who it is. It's super private. You can't hack it. So it's a nice secure way of managing identity, but also managing other things like payments instructions and so on, credit card details. So this is used quite commonly. Visa, MasterCard, a whole bunch of other networks will use tokenization. Indeed. But where we're going with tokenization is a kind of tokenization 2.0 is really moving it into kind of the digital assets space. So tokenizing real world assets and tokenizing securities, meaning that you take a real world asset like a painting, and you tokenize it. And you tokenize it, meaning you're able to represent it on a chain with a key, with a whole bunch of details that are relevant, but you can obfuscate and secure a whole bunch of other kind of details within it. And that token, the tokenization of it, I think the big change there is it's a legal representation, right? And it can be used kind of in an exchange on chain, and that becomes settled and final, right? As opposed to kind of, having it digitized, you and I can kind of exchange it, but still it needs to go through the current systems to get finalized and settled. And that takes days and days. So here, what you're doing is you're tokenizing these things in a regulated kind of legal way, so that when it's exchanged on these networks, they're exchanged kind of in real time, final, settled, and it's kind of legally represented. So I hope that was clear.
Excellent. No, thank you. And I just say, I think it's a fascinating space, and I think it's good to be able to sort of navigate what this could mean and what different terms mean as well, and what the opportunities are. Just switching gears a little bit, in terms of, as you mentioned earlier, that there was a plethora of funding coming into the sector. Probably peaked about two and a bit years ago, in sort of October 2022, and now we've sort of had a bit of a winter of that. I just wondered if you've seen organisations though that still attracting good funding, that ultimately VCs are still continuing to invest. Are there any user cases that you've seen where you think actually there's organisations that are still attracting good funding, whether it's Series B, Series C, on their way to scale up and ultimately sail out, from that perspective?
Yeah, things like buy now, pay later continue to kind of attract funding and growth. You'll probably continue to see some of that into kind of 2026.
Mm.
So that's an area that's kind of interesting. Security and privacy, anything that's kind of in that space, kind of the infrastructure side,
Yep.
making things more secure, making things more private. I think that still has very strong kind of attraction. Um, Anything around data is interesting, so that continues to be a space that attracts. Of course, data with AI now in the payment space is hugely attractive. Embedded finance, I mean, that's been something that's a trend that's been growing, just embedding kind of payments, seamless
Absolutely.
payments, and
Yeah.
enhancing customer
Yeah.
experiences, so that's still an area that we see. Of course, open banking APIs,
Yeah.
right? That's an area that continues to kind of be really exciting. A to A payments, A to A has been super strong. Of course, we see kind of the international networks such as Swift continue to invest there, and of course, lots of players
Significantly.
domestically are investing there. Real-time payments we talked about, and
Yep.
cross-border payments, like anything
Sure.
around cross-border. Kind of the G20 has a mandate, by a certain period of time to make it cheaper, faster, more transparent, and so players within that space are still attracting sort of relatively kind of healthy kind of funding.
Wonderful. Wonderful. Yeah. Yeah. Just reflecting. I just writing an article at the moment about what have been the sort of hot topics, particularly this year in all the conferences. And I think you've sort of hit each one of those. AI has been prominent as well as embedded finance. And I think the other one that did strike me as well, there was sort of business to business. I think, again, there seems to be a
Yes,
significant opportunity there to reducing friction, I think is the term, reducing friction across that space. And
that's a
ultimately,
good point, Adrian.
all starts with workflow. Again, which is just a feel I got from the marketplace as well.
Yeah, no, that's a good point. I think there's been a hell of a lot of focus on kind of the institutional side, very large corporate. We saw, JP Morgan Coin doing a lot of really
Mm,
cool stuff around, institutional payments, collapsing kind of, the reconciliation and the real time, kind of
mm,
getting to real time at the corporate level.
yep.
We've seen a lot of action at the remittances, retail. But
Mm,
yes, you're right. Kind of the SMB, the business to business side, small to medium sized businesses, that middle side has been somewhat neglected, I would
yep.
suggest, over the
Yep.
last several years. So yeah, you're right. We start to see quite a lot of focus there as
Mm,
this kind of this really big opportunity
yep.
around small to medium sized business and payments within that area, and really lifting the game, giving them,
Yes.
better capability, much more control of their money,
Mm,
visibility, like you say, just simple things, invoicing, just paying your invoices, right?
yep.
And a big trend there, I'd say, is like next generation treasury management. Like, how do
Mm,
I manage my money? Where is it right now? Can I do things like this? Is a cool little area that's fun to think about. You take an invoice and you tokenize the invoice, meaning
right.
you create an instrument, and the instrument says, hey, I am actually value. It just so happens that I'm mature in 30 days. But if you trust me as an entity holding
Mm,
this instrument, then you can use this as money,
mm,
right?
yeah.
Because it's backed. It's just going to clear in my account in 30 days, but you can use it if you have different payment cycles.
Yep.
So you start to tokenize
Amazing.
invoices and other
Yeah.
instruments
Yeah.
as forms of money, as liquidity,
Yeah.
value,
Yeah.
right? So, next generation treasury management is going to allow
Mm,
us to do these really cool things and
yeah.
change
Yeah.
how liquidity works generally.
That's amazing because you sort of had, the next generation of treasury management. It's that key word I think that also begins with a T that brings the whole of the ecosystem together. Though is trust. Trust is
Yes,
that the whole
yes.
system is built, or whether it's the four-party model or whether it's cross-border payments. Trust is the fundamental component. So a different, perhaps just changing sort of gears a little bit, a different sort of trust rather than just the ecosystem trust of humans. Yep.
Yeah.
So I wonder if we could just delve in and the relationships, because this is a lot of work we do within the Payments Leads Advisory, work with boards and leaders to build the right an effective operating culture. It's because they've obviously got great technology often, and but actually optimizing the value of that to their end users as well as then ultimately to their shareholders and stakeholders. What is for you the relationship between an effective operating culture as well as a mindset to be able to realize the true value of scale up and ultimately towards a sale.
Yeah, I mean it's interesting coming back to that behavior change and how do we get folks to kind of adopt a different mindset. It's hugely complicated, and we're doing a lot of work in that space. I think I suppose some of the key things, some of the keynotes to hit is like having a growth mindset, a risk-taking culture, obviously within the right kind of guardrails.
Yep, sure.
Being super customer obsessed and centric.
Yep.
Whilst being very supportive, being super collaborative.
Yep.
Removing the silos, simple things like, traditionally you'd have, waterfall versus agile. We all know that journey. A product team over there with an engineering team over here and a testing team over there, collapsing all of those folks into kind of, these cross-functional squads that own the entire vertical, can run fast, break things, lead, kind of fail forward, fail quick and just learn and be really collaborative as a team, but be super customer obsessed. And being focused on the customer, transparent, open communication. One of the things that I've come to learn kind of just over the last, several months or maybe a couple of years is, the way that you structure your organization hugely affects the way that the communication flows. It's obvious. But if you look at that and you think about it really carefully, it changes the way that you structure organizations. So the organizational structure is super fundamental kind of piece to get right. And the CEO really needs to be that's one of his most critical jobs to do. Make sure that the organization is structured in a way that allows information to flow transparently and in an open way that gives everyone empowerment to kind of make the decisions that they need to make in order to kind of, be customer centric, take the right risks and kind of, have this growth mindset. I think that's really important. Other things I think that are important is, by increasing kind of collaboration, by removing these silos, having the right organization structure and culture, you can move to increased productivity. Large organizations trying to catch up to fintechs. How do you do that? Well, the fintech's very small, it's got no silos, kind of just one team. You've got to get to those positions. Of course, in very large organizations, it's probably going to be more federated than just one big mass team. Fine. But the way to measure those things is to have very clear KPIs, and one of the things is we shouldn't measure effort, right? So forget measuring effort. You got to measure the result of the effort, the performance.
Okay.
Right. So, Adrian, he works 18 hours a day, but he's got really poor results. So, do we thank him and kind of, be really happy that he's working really hard, but he's just actually not getting the result. Right. So, moving to that kind of a culture where you're measuring results versus effort, I think is another key point. Those things are sensitive, takes time, but I think there's some of the key things that pop to mind as we start to think about kind of how do you move from one mindset to another.
Wonderful. So there's so many points there that we definitely echo with how the work we do and in our practice, etc. Just out of interest there, though, in terms of measuring results, though, I'm assuming there that we have to test effort. We have to test effort and say, am I working 18 hours and these are the results? Well, actually, that's inefficient. And we've tested it. If we did 9 hours in this particular direction, we have to test that effort to see what the output looks like. So there's a level of input output there, isn't there?
Oh, for sure. I mean, these things are not, there's not one way to kind of skin it. You really have to test and learn and test and learn.
Absolutely.
And of course, every organization is different. Individuals are different. Teams are different. The results that you're looking to achieve are different. So yes, it's a test and learn journey, and you get there eventually if you've got the right people with the right mindset, the right culture, the right support. Right.
Absolutely.
That's really the journey.
Yeah. Excellent. So moving forward now, again, it's not sort of crystal ball time, but I just we've touched on many subjects today that are sort of positively impacting the payments ecosystem and the end user experience, both for large corporates as well as business to business, and obviously the business to consumer marketplace. Where do you see perhaps concentration or fragmentation? Where do you see things by the sort of early part of 2026? What do you think is here to stay, and what do you think we'll see less of in across the payments ecosystem?
Yeah, I mean, crystal balling. So first of all, I think regulation is changing for sure. So the regulator's posture is different. What we see happening kind of in the US at the moment, change in kind of momentum there, and a change in focus has an impact more generally. So I think regulatory developments certainly will start to see big changes, I'd suggest to you, in the next kind of 18 months.
Yeah.
The adoption of certain standards, it's kind of regulation and compliance. Certain standards, of course, ISO 20022 continues to roll out. We'll start to see more of that, and more systems kind of adopting those standards. So regulation, standards, fraud becomes a big thing within that space. We see a lot of activity in fraud kind of detection, moving to things like fraud prevention. So this trend of, again, rear view to kind of front screen, meaning I can predict these things because now I've got access to very large language models. I can start to do really cool things around predictability, and I can stop nefarious actors before they kind of commit these actions. So from detection to prevention, I think, is a big deal, which is super cool. Continued focus on security and privacy. Certainly, if we believe that the question, Adrian, is, do you think over the next 18 months will be more or less digital? I think the answer is pretty obvious. More and more digitization. And if that's the case, an increase in security, in privacy, how do I make sure that I, as a public sector organization, a central bank, develop and issue an instrument that's digital, whilst ensuring that Adrian trusts, back to your trust that this instrument is not going to be used for surveillance, is fully private, and can be used for peer-to-peer payments without anyone tracking and tracing what Adrian is doing. Right. So lots of focus in that space. Some really cool technologies and developments and things like zero knowledge proofs, right, will continue to kind of evolve. They've been super promising, expensive and slow, but like any technology, the more we work in it, the more we kind of evolve it, it'll get to where it needs to. And I think, data privacy, strong security is something that we'll start to see more and more of. And then other things, real-time cross-border payments. The cross-border space is a space that really needs to change, right? And we're starting to see more and more of that. Of course, you see Wires and Revoluts and others coming into the space. I'd say to you that we'll see more and more and more of that as the incumbents, quote unquote, start to catch up.
Yes,
so that's going to be fun to see. And then, blockchain, crypto, we're seeing a little bit. I mean, Bitcoin might hit 100 and not too far away. That's crazy to think about. So more and more activity in that space. You'll probably see a bull run, and then you'll probably start to see a little bit of a slowdown in the next 18 months, maybe. Real-time payments more generally, digital payments dominance. I think we talked about more and more digital payments. A big focus, as you said, in the business side. So really cool innovations coming in on the SMB side. And then just generally revenue growth, I think, just a general growth trend in the next 12 to 18 months, as opposed to kind of a constrained kind of ecosystem, a little bit more of a growth kind of, opportunity in the next kind of 18 months.
Well, I think we can all do with that. I think that would be that'd be good news for all of us. So, Ricardo, this is the time where I try and create a summary of our conversation, if that's okay with you.
Yeah, wonderful. Thank you.
So normally I try and take the sort of salient 3 or 4 points out of this, but I've got pages and pages of notes here. So perhaps I could just try and summarize the most salient. I think the first one we started with is the passion for the industry always fascinated by why people are passionate payments people. But it was a very real experience and a very real life experience that actually that you lived as well as your family lived and your community lived that brought you into the ecosystem. And I think it's fascinating how, for many of us who haven't lived touch wood in that sort of space, how that directly impacts, relatively stable currency is often a given, in many industries where we trade or many countries where we trade. So I love the fact that you've brought that to life, but also you followed that, and it's a couple of decades into your career now. It's how you're taking that. I think the really interesting one for me then, when we move then into the areas of so what, the so what digital currency, what does that mean? What can that mean? I think what I heard there particularly was that the opportunity to collapse a very complex system exists, that a lot of the technology exists in that place. The big step forward, though, is about mindset and desire, particularly from central bank and central government, to be able to say, actually, this is something that is difficult, that is going to be complex. We're going to need to do it well. We're going to need to take steps to actually deliver that effectively. But it starts with desire to make that work. I think then on the business to consumer side as well, significant opportunities are there, but just particularly for in the case of physical assets to move them into digital assets. I think the other piece that was really interesting then when we talked about the need for trust, and the whole ecosystem is built on trust, and that's not changing. That's a given, and it's not a given, sorry, it's something that always needs firm commitment to. I was really fascinated to look at then about operating culture, where many of the terms there that you said, actually, look, what we need to do there is collaboration is key across an effective operating culture, reducing silos, whether it's product engineering, and dare I say, add commercial on top of that as well, about actually, the CEOs and the leaders and the board's responsibility to how do we stay customer centric and how do we stay customer obsessed? That's our goal, because I think we can get a bit waylaid by just the regulator, be the reliance on compliance. Well, there's customers we're trying to serve here, and how do we best structure our business so we can serve them most effectively? Um, but again, coming back to mindset there, it's about having a institutional and also individual and team growth mindset of being able to understand what is working from an output perspective relative to inputs. So I thought that was fascinating from that area. And then in terms of we sort of looked at the crystal ball a little bit about where we're headed in 2026. I really hope you're right in terms of we've had a time of quite a lot of consolidation. Hopefully there's growth across the industry, because there should be, because there's much friction to take out of the industry. Yep, we can see, is it likely to be more digitized? I think that's sort of almost self-fulfilling from that perspective. But I suppose the big one there is the therefore so what, who's going to adopt this, when they're going to adopt it, and also how are regulators, how are they going to set the guide rails here? And one of my takes for many people, or is a question for many people in the audience, how's your organization going to interact and partner with the regulators, and how do you see the regulators? Do you see them as an opportunity, as a vital? Because somebody said to me the other day, I see the regulators now for me as a customer. I was like, oh, that's interesting. Nobody had ever said that to me. The regulators, I've heard them being called other things other than customers. But partnering with as a customer, that changes the mindset. So I think what's happened here for me, firstly, thank you so much. I've learned a huge amount, and I'm sure there'll be many questions from the audience about the difficult areas. And I feel we could have explored digital assets so much further as well. So is that, what do you think there of the summary?
Yeah, I think that's very well captured. I love the point around regulator as customer and also as partner. I think that's another key point where you're getting closer and closer to the regulator, and these things are so complex. You're changing so much of kind of the tech, but it's not only the tech, it's the legal, it's the compliance, it's the commercial, it's the business. I mean, the whole layer cake is going through change. So that's a really good point that you've captured. But yeah, I think that's a great summary, Adrian. Thank you.
So my pleasure. My pleasure. Sorry, I've always got the easy job. My easy job is just to summarize the great content you provide. So thank you for that. Do you have any final thoughts?
Oh, final thoughts. I mean, for me, as folks look at, where is this all headed? I think the one thing that kind of, the one quote that kind of continues to play out in my head is, payments today are super lumpy, and we're
Mm,
trying to get to kind of,
mm,
a place where, we're moving to kind of liquid payments. Like, a simple story. Adrian works 8 hours a day. Why doesn't he get paid every minute? Like, why isn't money flowing at the same rate as his effort? And that's kind of
yeah,
a
yeah.
cool kind of thing to think about. Payments moving not just between humans, but machines to machines. Cars are being charged electrically. You see pumps
Yes.
all over cities. How are those payments being made? Should the car be making those payments? So, machine to machine, human to human, moving from kind of lumpy to liquid is really kind of the longer term beyond the 2026 cycle. So maybe as a last thought that kind of continues to play out in my head.
Ricardo, I always look for like the sort of key headline that's from our conversation, and I think, how do we move payments from lumpy to liquid? I think that's it. Brilliant.
Wonderful, wonderful.
Well, thank you so much for your time, for your insights, and for your wisdom. I'm pretty guaranteed the audience is actually going to love those. So thank you very much. I very much appreciate it, and
Thank you, Adrian.
wish you a great rest of the day.
You too, mate. Thank you so much.
Thank you.
Thanks for having me. Cheers.